Stock and CFD traders have to compete not only with other traders in the stock and CFD markets, but also with themselves. Often as a stock or CFD trader, you will be your own worst enemy. We as humans are naturally emotional. Our egos want to be validated. We want to prove to ourselves that we know what we are doing and we are capable of taking care of ourselves. We also have a natural instinct to survive. Many stock and CFD traders believe it would be ideal if you could completely divorce yourself from your emotions. Unfortunately, that is next to impossible, and some of your emotions may actually help improve your trading success. The best thing you can do for yourself is learn to understand yourself as a trader. Identify your strengths and your weaknesses, and pick a trading style that is right for you. As you begin to evaluate yourself psychologically as a trader, you may want to start by seeing if you identify with any of these 4 trading biases: overconfidence bias, anchoring bias, confirmation bias, and loss aversion bias. Overconfidence bias is an overinflated belief in your skills as a stock or CFD trader. If you ever find yourself thinking to yourself that you have got everything figured out, that you have nothing more to learn, and money is yours for the taking in the stock or CFD markets, you probably suffer from an overconfidence bias. If you want to know if you have any overconfidence tendencies, ask yourself, have I ever jumped right back into a trade I had just been stopped out of, not because I saw another entry opportunity, but because I couldn't believe I was wrong? Anchoring bias is a propensity to believe that the future is going to look extremely similar to the status quo. When you anchor yourself too closely to the present, you fail to see the dramatic changes that are possible as stock prices fluctuate and the underlying fundamentals of the companies or indices you are watching shift. If you want to know if you have any anchoring tendencies, ask yourself, have I ever lost money because I couldn't accept the fact that the trend had ended? Confirmation bias is a propensity to look only for the information that confirms the beliefs you already have. For instance, if you believe that the Nikkei 225 index is going to go up, you will look for the news, the technical indicators, and the fundamental factors that support your belief. If you want to know if you have any confirmation bias tendencies, ask yourself, how often do I look for signs that I may be wrong in my analysis? Loss aversion bias is based on the theory that the pain that is caused by losing $1,000 is greater than the joy that comes from gaining $1,000. In other words, fear is a more powerful motivator than greed. If you want to know if you have any loss aversion tendencies, ask yourself, have I ever held on to a losing trade past the point where I knew I should have gotten out because I hoped the stock or CFD would turn around and wipe out my losses? You may have surprised yourself with your answers to some of these questions, and hopefully you've learned something about yourself. As you move forward as a trader, just remember that you can begin to overcome these biases and many more by following 4 simple guidelines. Establish a strict set of risk management rules. Trade with physically set stop-loss orders. Look at multiple chart timeframes when you analyze your trades. And trade with a partner or a group of people who can help you ensure you've looked at everything you need to before placing your trades.